Aloha, inspired moneymaker. Thanks for tuning in. If this is your first time with us, welcome. If you're returning, welcome back to Inspired Money. I'm your host, Andy Wong, aka Advisor Andy. This is episode 92, and fittingly, it's our final wine episode as we count down to 100 in our live stream series. Today, we're talking about wine auctions and collectible bottles, unveiling investment opportunities. I've always loved talking to people who are so passionate about wine that somehow everything, your food, your drink, even your conversation, just tastes better. But today we're not just talking about tasting notes, we're exploring wine as an investment, where emotion meets economics and where a great bottle can be both art and asset. From the auction houses setting record-breaking prices, to digital platforms transforming wine into transparent, data-driven markets, to sommeliers who connect us to the stories behind every cork, we're diving into the world where collecting meets opportunity. So pour yourself something that you enjoy and stay tuned. You're about to meet an incredible panel of experts who live and breathe the business of fine wine. Before we get started, a quick thanks to our sponsor, Runnymede Capital Management. That's my investment firm, because planning your finances is not just about numbers, it's about enjoying life. Earlier this summer, my family and I were in Tuscany and Umbria, tasting incredible wines, and yes, we even brought a few bottles home. Financial clarity means that you can take trips like that, or plan for retirement with confidence and peace of mind. I want to invite you to get a free financial plan in just 3 minutes. You can see your projected retirement age, income, and personalized strategies to grow your investments, reduce taxes, and protect your future. You can go to inspiredmoney.fm/getplan and start planning for the experiences that really matter. Now let's bring in our guests. I'm especially grateful for our guest being so agreeable and accommodating, because I forgot all about daylight savings time here in the US, and this threw a little bit of a wrench into our scheduling. So I'm excited that we are all here together. This episode is going to go a little bit longer because in the spirit of Lilo and Stitch, we are all Ohana and nobody gets left behind. So let's welcome in our guests. First, we have Nick Pegna, Global Head of Wine and Spirits at Sotheby's. Nick brings over 30 years of international experience building and leading fine wine businesses across Europe and Asia. A former senior executive at Berry Brothers and Rudd, he helped shape global markets and co-led Hong Kong's successful campaign to abolish wine duties. Today, he oversees Sotheby's record-setting global auction and retail operations. Nick, welcome.
Andy, thank you very much, and pleasure to be here.
Next, joining us from London is Callum Woodcock, founder and CEO of WineFi, a next-generation wine investment platform. He's a former JP Morgan asset manager with degrees from Bristol and Cambridge. Callum is pioneering a data-driven approach to making fine wine investing more transparent, tax-efficient, and inflation-resistant. Callum, welcome.
Thank you, Andy. It's a privilege to be on this panel amongst so many esteemed guests.
And I guess I should rephrase, joining us from Spain.
Yeah, well, there you go.
Okay, so now that we're more accurate, we also have Amanda McCrossan, a sommelier, media personality, and creator of Samvivant, where her wine-focused content reaches over 450,000 followers across Instagram, TikTok, and YouTube. Formerly wine director at Press Restaurant in Napa Valley, home to the world's largest Napa collection, Amanda is now a leading voice in wine education and storytelling, hosting the Wine Access Unfiltered podcast and appearing at major global wine events. Amanda, welcome.
Hi, it's good to be here. Thanks for having me. And I'm excited to have this conversation with such esteemed friends here.
It's going to be fun. And then joining us from Liv-ex, the global exchange for fine wine, market data, and insight, is Robbie Stevens. Robbie is the head of broking, where working with the world's largest buyers and sellers every day to provide data-driven intelligence and trading opportunities. With more than a decade at Liv-ex and experience spanning major wine markets, he's become a trusted voice in the global fine wine economy. Robbie also shares his expertise on the international stage, speaking at events like Vin Expo and the National Association of Wine Retailers. Robbie, welcome.
Great to be here. Thanks for having me.
And then later in the episode, we'll be joined by Dustin Wilson, master sommelier, entrepreneur, and co-founder of Verve Wine, a modern retail and hospitality brand with locations in New York, San Francisco, and Chicago. He's known for his role in the Somm series. And Dustin also launched Après Cru, a firm supporting the growth of visionary restaurant concepts. This is going to be a really fun conversation. I look forward to be inspired and enlightened and learn a lot about wine and the business of wine. We've got a lot to cover. So let's get started and jump into segment one.
Success at a wine auction starts long before the bidding begins. Serious investors treat the catalog like a financial prospectus, screening for provenance, condition, critic scores, and market data. The critical step, set your all-in max bid before the auction. Include the hammer price, buyer's premium, and taxes. Write that number down and stick to it. During bidding, ignore the theatrics. Jump bids can clear the field fast, but late bids can backfire online. Use absentee bids to avoid emotional overspending. If the same wine appears in multiple lots, wait and observe. Let the early lots reveal market appetite. Never forget, the hammer price isn't the final cost. Disciplined bidding protects your capital and ensures you're buying an appreciating asset, not overpaying for a label. Auctions aren't about outbidding others. They're about executing a strategy you defined well in advance.
Nick, for those of us who have never been or participated in a wine auction, tell us what it looks and feels like.
Well, so Andy, I think it's worth saying that there are two types of auction essentially, and since COVID, about 2/3 of the auctions that Sotheby's run are online, and so taking part in those is a very different experience to being live in the room. But when I say 2/3, that's approximately 40 of the 60 auctions that we run around the world. So there are still plenty of live auctions for people to take part. But I think the principles are the same. If you're going to take part in an auction, it makes a lot of sense to do the research ahead, identify the lots you're interested in. But I must say that there are a few things that can come close to the experience of being in a live auction, particularly those larger auctions. And we're privileged and honored to conduct both the Hospice de Beaune auction, which is the largest charity auction, which takes place in Burgundy this month in November, normally the second weekend. And there are as many as 1,000 people in the room or across two rooms bidding, but also the Napa Valley auctions and the Premier Napa Valley auction, which happens in February in Napa, which Amanda will know well, can have as many as 400 people in the room. And both of them, but Napa and Hospice, are a wonderful combination between, I would say, the precision of an art auction and something a bit closer to a cattle auction in terms of the rowdiness and the noise and the excitement. And they are a lot of fun. And the idea is to energize the room and to get people fully engaged. And that happens. And it's a wonderful experience to be in.
How have bidder demographics evolved since Sotheby's expanded online?
So it's very interesting. We've acquired a much younger demographic than we'd previously had. The under 30s have engaged a lot more, but we've also noticed that there's been a shift in terms of geography, because traditionally our key areas have been London, Paris, Geneva, and then New York in the States, and Hong Kong for Asia. What online bidding has allowed is it's unlocked opportunities for people sitting at home. And so we found that markets that perhaps haven't been as engaged in the past have really engaged. We've seen Central America involved. We've seen other parts of Asia, particularly coming in. And of course, within the United States, the opportunity for people to be bidding, even if they can't get themselves to the East Coast. And so it's substantially improved the engagement that we've had. And I'd also say for anyone who's ever taken part in an auction online, the speed at which auctions transact now and the lack of latency, you can bid online and it's as effective as if you were in the room. You don't have the same atmosphere, but your ability to engage at speed. And as auctioneers are trained, they're always trained before they bring the hammer down to look up to check that normally the last bid to come in is an internet bid. So they're always there looking out for it. And so you can really become fully involved bidding on the internet, but there's nothing like the experience of being in the room.
Robbie, tell us a little bit about Liv-ex.
Yeah, so we operate the kind of global exchange for the fine wine market. So much like the New York Stock Exchange is or the London Stock Exchange operates for stockbrokers, we operate for fine wine merchants. So we've got members from across the world, in the US, in Europe, in the UK, and Asia, who all access Liv-ex in order to not only get access to the data in order to make trading decisions, but also the ability to actually transact. So we supply real-time independent transaction data. So wine businesses, some of whom might be in the room, can make informed trading decisions. And obviously, then if they seek to transact with Liv-ex, we support that trade and actually physically move the cases between the two different businesses from all over the world.
Are you able to capture auction data?
Yes. So we capture auction data. We receive auction data from auction houses across the world, so we can benchmark auction data against transaction data that's occurring on Liv-ex and against inventory stock lists that are published all over the world. So we can give a wine merchant, much like, I guess, in financial terms, access to their Bloomberg terminal, to see exactly what's going on any given wine. And we've been doing that for the past 25 years.
That's interesting that you bring up Bloomberg terminal. I'm assuming that Callum is familiar with Bloomberg terminals with your background at JP Morgan. Can you talk about WineFi and maybe the impact of when you integrate auction data into investment decisions on your platform?
Yeah, absolutely. So just as a brief background to your listeners, WineFi is an investment platform for investing, specifically investing rather than collecting or drinking fine wine. Really, when we founded the business, we set out with two core objectives. One, how could we lower the barriers of entry to building a diversified wine portfolio? And we have sought to achieve that through a syndicate structure, which works a lot like a property syndicate or an angel syndicate. But also we wanted to apply the rigor of quantitative analysis that you would see in the traditional the traditional financial markets, too used to saying fine wine, to this really fascinating asset class. And we do call it an asset class because it does have the characteristics of one. Ultimately, there are wines that appreciate and depreciate in price. They're subject to market forces. There are a variety of factors that influence fine wine. And, speaking about auction data, that's absolutely a really important data point. But wine is unique amongst what we more broadly call collectibles, by which I mean classic cars, watches, whiskey, anything of that ilk. In that, thanks to the Liv-ex and others, there are 25 years plus worth of real-time trading data that allow us and others to backtest investment models in a way that simply is not possible in other asset classes. And auction data is an important thing that we factor in when we are looking at factors that have influenced the price performance of a wine over time. It's sort of up-to-date trading data, but it is one of several price indicators that we would look at, I suppose, when making investment decisions.
Interesting. So do you think that wine is a more efficient market than some of those other collectibles?
So I do, and anyone on this call, please feel free to disagree with me, because the wine trade often beats itself up as to just how inefficient the market is. But I do think compared to art, compared to whiskey, compared to watches, just to use those examples, there is a greater degree of price discovery thanks to businesses like the Liv-ex, to be honest, amongst others, than exists in those asset classes. And one, that's a longevity thing. Two, it's because of the existence of real-time transaction data, not just list prices. It's the thing that matters ultimately is not what the wine is listed for sale for, but what it actually transacts for. In the same way that if you're investing in property and you list your house for sale and you get an offer 10% below your asking price, that is the offer that matters if you accept it. The actual trade price rather than that initial list price. And I do think, and Robbie and Nick will tell me if I'm wrong here, but I do think, sorry, and Amanda, but I do think that is unique amongst collectibles in just the amount of data that exists around fine wine.
Amanda, what's your experience with auctions?
Well, back when I was the wine director at Press in Napa Valley, we used to utilize auctions a lot. And I think coming from a non-wine drinking household, auctions were brand new territory. And I had no idea what I was getting into when I walked into my very first live auction, which was a mistake. As Nick pointed out earlier, it's an exciting atmosphere. I sort of liken it to being at a sporting event versus watching it at home. Both are really, really fun, but you do get sucked in a lot more because, there's energy there. Often there's something very fun to drink there. And so you find yourself getting sucked in and perhaps overbidding when you shouldn't. I also found that not having a plan and putting that on a sheet of paper or even better in a spreadsheet, that is something that you should definitely be doing if you're thinking about not just bidding on one or two things, but many different lots, which you should have many different options. But I've found that building in formulas where you can see what that end hammer price is going to be is crucial whether you're doing that in person or online. But it is very fun. And I do recommend the experience just for anyone who's curious about what it's like.
Robbie, you have something to add?
Yeah, it was just on Callum's point. I think that the additional string to wine's bow is that it's fungible. Unlike classic cars or a piece of art, wine does have fungibility. Lafite, every vintage, make 30,000 cases, 40,000 cases, and correctly stored and in the correct condition, you can trade a case like for like. And that enables us and others to benchmark data across time. We can trade a case of Lafite 2005 today that we can say is in the same condition as a case that traded 10 years ago and 15 years ago. And so tracking that price over time for something that is so precise, I think that's what's unique about wine versus other collectibles, perhaps.
Nick, what's a common mistake a first-time wine auction bidder may make, and what advice do you have for them to avoid it?
So I think often people think that waiting and coming in at the end, which they might have done in the past successfully with online auctions, can achieve the best outcome. Actually, most auction houses are able to build in an anti-snipe function, and so last minute bids within, let's say, the last 30 seconds simply extend the bidding period. So that strategy doesn't work. But I think that the other mistake that people make often is to get a little bit hooked, and maybe this was something Amanda was alluding to, a little bit hooked on the sheer adrenaline rush of raising your paddle. And then the auctioneer looks at you and everyone else in the room looks at you and you think, wow, I'm winning. This is great. And that starts to feed into all sorts of other things that are going on. And it's a really exciting feeling. And when you do win your first auction lot, it's a wonderful thing. And it's a great feeling. And people become addicted to it. And we see it happen again and again. But I do think that the most careful and frequent buyers at auction have a strategy. They've planned what they're looking to bid on. They have fallback scenarios if they're not able to win the lot that they're first looking at. And they're also looking across multiple auctions. So if they're not successful with an auction on a certain day at a certain point, they know they can go and find a wine elsewhere. And it goes to Robbie's point about fungibility. I think one of the things that we find that works particularly well at auction is when you have the rarest bottles that aren't found anywhere else. And rarity is one of the key elements that drives activity. And so we take various data points like measurements around the number of bids per lot, even the number of underbidders, the number of paddles per auction. And we know when we have rare bottles or completely unique bottles coming up, the level of interest is much stronger. And to take a case in point, we have an auction opening in Paris later this month with Liv-ex bottles from a member of the Rothschild family. And some of those date back to the 1870s, and they're lying at Liv-ex and they've never moved. Now, the Rarity, the Provenance, and the story behind them means that these are going to be completely unique. And we know that there will be very, very strong bidding in advance of the auction. And we're being contacted by people as soon as the news is broken saying, can we get an inside track? Is there some information you can give us ahead of the sale opening? Of course, everybody is treated equally because the sale is open and everyone can bid. But there are people who want to at least make the decisions ahead of it, looking at bottle conditions, requesting photographs, and having everything else in terms of background information in advance of the sale. So professional or committed buyers ensure that they have all of the background information ahead of the sale.
Callum, is WineFi going to auction on behalf of investors on the platform?
So Nick has actually inadvertently teed me up very nicely for my answer to that question, which is, I think Nick's completely spot on. You know, those type of really rare, truly collector's item bottles, you know, are perfect for auction. We are often approached by individuals who have a portfolio, or actually more often than not have inherited a wine collection, and they want someone to take over the management of it. Our nightmare is really rare, illiquid, you know, large format bottles. You know, we saw an Imperial of Sassicaia recently, because we wouldn't place them within our own portfolios because we need to be able to exit on behalf of our clients within a certain amount of time. And we need to do that in as low a cost way as possible. So, you know, I think where, you know, WineFi would go to auction, in theory, you know, if we were looking to sell something like that, but actually typically our portfolios are built to be more readily tradable. And, you know, to Robbie's point, you know, we would look at the more fungible wines where there are more data points in order to get an understanding of how those wines would perform in portfolios. So I think it's quite an interesting difference between how we would operate as a business and, you know, the kinds of wines specifically that Sotheby's would be looking for, interestingly.
Amanda, your advice, it sounds like have a spreadsheet, do your homework, try to eliminate some of the, I think, emotion from the buying decision, and maybe don't drink too much at the auction.
Well, I don't know. Maybe Nick would disagree with that, given that you know, it does tend to get you going and get those paddles higher. But yeah, I mean, I think, you know, as a buyer, yeah, the best thing you can do is be prepared, right? So we've sort of danced around this a little bit, but yeah, I mean, you requesting all the information ahead of time, or even better, you know, many auction houses allow you to go see the wines in person. So when I was, you know, going to auction houses in San Francisco, I would often go a few days before, and I would personally inspect the bottles. I would look at them with light, because ultimately, you know, when you're buying through auction, it's not Costco. You can't return it, right? You buy it, you own it, it's yours. So you want to do as much due diligence as you can. So yeah, you want to be prepared. You know, the spreadsheets are key. But also, I think just going back to the semantics of what it's like on the buying side of things, I think the first thing that you really need to understand is what, you know, what is it that you're doing? You know, you're buying not just potentially one wine, you're buying every wine in that lot. And then also, I think this idea of what a buyer's premium that eventually leads to that hammer price is. So I think researching, and every auction house is going to be different. That's the other thing that maybe we haven't touched on, is researching what the buyer's premium is. So once that hammer price, which is that last paddle price that you bid on, once that goes up, there's going to be percentage added to that, plus, you know, whatever taxes, depending on where you're buying from. Then you have to account for shipping and how you're going to actually retrieve those bottles. So there's a lot of costs associated with buying at auction that aren't just the hammer price, that I think maybe maybe people should take into account more than they already are. I think it's, it's very exciting to see, $200 for a bottle of Sassicaia. That's great. But in the end, it's really like 300 because you haven't factored all those things in.
Yeah, Robbie?
Sorry.
I didn't know if you were raising your hand.
No.
Okay, well, I think it's really interesting hearing.
I think Nick is.
Oh, Nick, go ahead.
I was just going to come back on Amanda's point. I think she's absolutely right. One of the things that is important when you're buying at auction is to understand the on costs and to understand the implications of what you're actually committing to. I would just want to pick up on one point particularly, because I think policies vary from auction house to auction house. Of course, it's caveat emptor, so buyer beware when you're buying at auction. But I would make the point that at Sotheby's, we offer an authenticity guarantee, and so people are in a position to return bottles, particularly if there's any concern around a discrepancy that there might exist between the way it's been described, which is in a lot of detail, including pictures, and the bottle as it reaches people. It very rarely happens, but it's there as a guarantee for people. And I would make the point that I think that auction is a wonderful platform, but it is as good as the diligence of the house that you're buying from. And so on occasion, there have been, I think, assumptions around the auction being a place where some less scrupulous players have used to dump lower qualities bottles or bottles with poor provenance or problems. And that's been the case, unfortunately, in the past. It's given auction as a whole a bad reputation. But I think that what the thing to consider is the reputation of the house itself that you're dealing with. And there is no bottle and no case of wine that's more valuable than our reputation. And it's true of a number of the other leading houses. So I think in that respect, you can be assured that you are protected. But I would say that the bit that isn't clear to people sometimes is the commitment they're making when they raise the paddle. So Amanda's point is well made and valid. You need to know the on costs and you need to understand the full implications.
Great advice. Let's move on to segment 2.
Not all fine wines are investment worthy. A true blue chip bottle combines prestige, performance, and proof of care. It starts with pedigree, iconic producers in regions like Bordeaux, Burgundy, or Napa. A strong vintage year amplifies its value. Then comes critical acclaim. A score above 95 from a top critic like the Wine Advocate can boost demand instantly. But even the perfect wine is worthless without pristine provenance, documented storage in ideal conditions. Lastly, scarcity drives value. As bottles age and are consumed, supply shrinks while quality improves, creating a powerful supply-demand dynamic. Investors don't just look at the label, they assess liquidity, auction performance, and aging potential. A blue chip wine is not just a drink, it's a tangible asset with decades of price appreciation behind it. Like any investment, its success depends on fundamentals, market data, and meticulous due diligence.
Callum, I think you were referencing these blue chip wines in the previous segment. Can you talk about how WineFi, how you determine which bottles will appreciate most reliably?
Yeah, absolutely. I was just really admiring that animation. Whoever your animator is, we need to get hold of. So yes, absolutely. I think the first thing to say is that, wine has this very interesting supply and demand dynamic in that there is a limited number of cases produced at a vintage by every blue chip producer. And we can come to, how we interpret that phrase in a moment. But that over time, bottles are consumed, they are improperly stored, and so there is never diminishing supply. And wine is a Veblen good. As that supply side decline decreases, the demand side increases. That's the basic concept around investing in wine. However, we see a lot of misconceptions, I think, when it comes to investment grade wine. The first and foremost is a lot of people think investment grade wine solely means brand equity. How well known is this producer? And of course, that really factors into it. But ultimately, what we always come back to as a starting point is secondary market liquidity. Because ultimately you're buying something as an investment, and this is specifically framing this as an investment, that does not pay a yield. So the only way to make money on that particular object is for someone to buy it from you, ideally at a higher price than you paid for it yourself, but someone needs to want to buy it from you. Otherwise, it is pure speculation. Now, if you're looking at, the next potential up and coming producer, we see a lot of speculation around certain South African producers at the moment. That's one thing. But really, it comes down to secondary market liquidity. How easily is this wine tradable? So secondary market liquidity plus, brand equity really is a starting point. Is this producer in sufficient demand for someone actually to want to purchase it from you in the future? What determines the price appreciation of the wine is very varied. We at WineFi have built two different models, one of which determines our target entry price. At what price would we be willing to acquire a particular wine? But the second one looks at price performance. And not to labor this point too much, but the fact that there are a quarter of a century's worth of real-time trading data now around this asset class allows us as investors to introduce variables when we're backtesting models. So we can actually see how, if you introduce something as specific as a critic rescore from a certain critic, would that have impacted the price trajectory of a certain wine or even a certain region over time? And we have tested so far 87 different variables. 35 of them we've kept in the model to basically, because we have seen that there is an impact. And that's everything from, the quality of the vintage. It sounds very obvious, but if you're buying champagne, a 2008 or a 2012 is going to perform better than a 2013 typically. But the age and lifestyle stage makes a really big difference. So a lot of people think investing in wine means buying Bordeaux en primeur. And actually Bordeaux has had the lowest compound annual growth rate out of any of the 7 regions that we consider investment grade over the last decade and a half. So there's multiple factors that come into it, but the secondary market liquidity one is critically important, because I think a lot of people think that you buy a great wine and age it and you will be able to sell it on, and that could not be further from the truth. And actually where we've seen some either misinformed or bad actors in the space, it's presenting a wine as the next big thing, and actually there isn't existing demand for it. That demand isn't going to filter through, and therefore ultimately you're stuck holding a wine that may be fantastic to drink, but it has no resale value. So that resale value element is critically important if you're treating it as an investment rather than just a collectible.
Yeah, very important point. Amanda, how does storytelling contribute to perceived value? What metrics do you look at?
Well, I think storytelling is wine, right? The two go hand in hand, and value of a bottle has a lot to do with the story that is being told around it. Scarcity is really only informed by storytelling. So I think especially in a place like Napa Valley, that's a relatively new region by contrast to something like Bordeaux or Burgundy or Champagne. Napa Valley certainly has the terroir to support it. They have the grape growing, but ultimately what has made it so successful is the storytelling element and being able to trade with your friends. If you look at a bottle of Screaming Eagle versus a bottle of something else that's maybe right next door, I mean, Screaming Eagle's in Oakville, right? Right next door to that is Rudd. There's Harbison. There's Tench Vineyard. Those vineyards are very similar to Screaming Eagle, and yet Screaming Eagle on the secondary market is going to trade 4 to 5 times higher than any of the wines around it. Is that winemaking? Is that soil? I don't know. I think a lot of that is storytelling, and it is a huge factor. And then you have to look at something else like some of these more up and coming producers that get whispered about. I think McDonald is a great example of that in Napa Valley as well, that has great pedigree. They're fantastic guys with a beautiful vineyard, but those bottles started trading really high in the secondary market, I think because there was scarcity and because there was just great storytelling behind it. So it does contribute in a very, very big way.
Nick, from your years in Asia, how did regional taste influence what the global market now values?
So I think it's evolved, and so it's worth saying that in the early days when I was in Hong Kong and we were going into China, we were talking to people about Burgundy, for example, and they were saying, well, is this Romanée-Conti? And if it isn't, what is it? But then in later years when we went back, there were people who had informed themselves to the extent that they were talking about malolactic fermentation, which is a very technical winemaking element that people had evolved so much in their knowledge in a relatively short space of time. But I think if we come to the tastes and how those had evolved, it was undoubtedly Bordeaux as an entry point, and then tastes evolved from there. And I think that we have to shout out to Robert Parker and other critics who simplified the process of whether we agree with them or not, simplified wine so that as a newcomer to wine, you had at least an opportunity to assess where quality might lie. Now, that I think was a really good first step. But I also think it was quite a dangerous simplification, oversimplification even. And what's happened, and clearly since then, is that people have become so well informed and so knowledgeable about how to taste wine that things have moved on enormously. And I'll give an example. Not so long ago, perhaps a decade ago now, I was in Japan and I was standing at a champagne fair in one of the big department stores. And a lady came over to me who was an amateur collector, but she spoke to me in fluent French, assuming I was French. I gave her a glass of champagne and she stuck her nose in and she tasted it and she was able to tell me the dosage from tasting it alone. So informed was she as an amateur collector that she could do this. She spoke French because she was in love with things that were French. It shows how much she'd chosen to educate herself around something she was passionate about. But I think if we were to summarize it, it was Bordeaux first, it's now Burgundy, and then that's moved on to everywhere else in the world. And so I think it's, everything is exciting and new. And, people talk about sparkling sake, people talk about wines from, Piemonte, which I think are underrated and not yet discovered, but that's coming quickly. But the cutting edge of the market is as much in Asia as it is anywhere else.
Robbie, what are your thoughts?
I don't think we as people necessarily can define what a blue chip wine is. I think the market defines what a blue chip wine is. I completely agree with Callum. You need secondary market liquidity to be able to define yourself as a blue chip wine, and a secondary market value needs to exist. There are so many great wines out there that would be classed as great wines and wines that are desirable from a collector's perspective, but actually when it comes to investing in them, buying them is the easy part, but selling them obviously is that much harder if you don't have that liquidity of bids to support it. So I think one of the things that we've done as Liv-ex over the last 25 years is try to define the most liquid wines in the form of compiling our indices, and that starts with Bordeaux. And back when Asia was booming, in the period that Nick was talking about, 95% of the market, of the fine wine market, was Bordeaux, and actually 50% of it was the first growths. So the first growth being 5 single wines, and 50% of that was one single wine in Lafite. So 25% of the wine 15 years ago, back in 2009, 2010, was one wine. And over time, we've seen that people's interests broaden, and deepen, and that's where you've had, and it seems silly to say it, but emerging regions like Burgundy and Champagne and Napa come to the fore. They're obviously very, very well established regions in the world of wine, but in the world of kind of the secondary market and having a secondary market value, those are the regions that have emerged over the last 10 years. And Bordeaux now today is 35% of the market, 40% of the market, and Burgundy is 30%, and Champagne is 15%, and wines from Italy and Tuscany and Piedmont are 10 to 15%, and Napa, of course, and wines from the US might be 5 to 10%. So it's a broadening universe. Transparency has aided that. It's not only in people being able to get access to fine wine data and information on that regard, but also the storytelling that Amanda's talking about, the access to retailers, the access to online, the access to critics and knowledge to further their interest, and that's obviously grown the pie for everyone.
Yeah. Could I just add a comment to that, Andy, if you don't mind?
Sure.
So Amanda, I thought it was really interesting you used the phrase whispers about up and coming producers, because we hear the same thing all the time, both from our peers and our clients, and there are a certain South African producer who I won't name because from what I understand he doesn't like the publicity, but there are a lot of, I guess for want of a better word, retail buyers, individuals rather than businesses, who are very passionate about certain wines from this producer, who are buying on allocation, and then you see these wines appear, perhaps not on the Liv-ex, but certainly on BBX a few months later for 3x, 4x the price. And it's really interesting because a lot of people go, "Oh, is that the next hot ticket?" And it's almost, when you're looking at buying and selling in volume, as we are, we couldn't touch that particular wine, and yet it is being driven by consumer sentiment. And I think that's a really interesting dynamic, because you have two sides of this market. It's you have the predominantly the passion-led element, people who are buying great wines because they love the story, to your point, and then you also have people who are looking to buy wines that are likely to appreciate in value because they want to make some money on them, and typically that's still a passion element. They're just justifying it to themselves as an investment. So I think there's a lot of very interesting angles here. And I don't necessarily think there's one right answer, but when you're specifically talking about investing, I think you do have to go in with that, to Robbie's point, with that secondary market liquidity lens. Not to take all the fun out of wine, sorry.
And if I may just jump in, I think to support what everyone has said so far, I think one of the, for me, the critical three elements are rarity, provenance, and maturity for us. So at auction, you tend to see mature wines coming up rather than immature. And I think that we would all on this call acknowledge that there's a difficulty in the secondary market with selling immature wines. I think that's been part of the problem. Once wines are mature, then you're talking to an audience who are looking to buy them to either drink them, or those people who might consider buying them for investment are doing so in the knowledge that the wines are being consumed. And then we come back to the Veblen commodity that Callum was referring to earlier. But just one more element that I thought would be particularly relevant. The way that wines are sold has a bearing on secondary market pricing. And so extremely tight and controlled allocation can give the impression of people getting extremely good access at value to wines. And once those wines are then put on a wider marketplace, prices jump substantially, because in effect, what you're looking at is the constricted demand that's created by this allocation. But it is a double-edged sword, because the rarest wines are often sold by merchants with all sorts of strings attached in terms of whether you can resell them. You have to sign contracts to say you can't. You have to buy all sorts of other wines that are bundled up in the purchase. And that is, to me, not very useful in the market. It obscures true value. And it does create opportunities that ultimately the owners of the wines will want to exploit. And so that's where you see things like in Napa, historically, people who were on lists to achieve allocations when wines were first released. There are a number of Burgundies that I don't need to name here that are sold in that way, which can be good for the people receiving those allocations, but isn't necessarily great for the market, because it creates an artificial pricing model that generally doesn't help and can give false impressions as to what value really is.
Totally agree. I think one of the core things that any wine business struggles with, including ourselves, is secondary market depth, because so much wine is in private hands. You never really, especially for older vintages, but even for new ones, you never really know what has been consumed. And therefore, is there a collector that has been, has a cellar full of this stuff that they could suddenly release onto the market? And so, we've had to come up with proxies for market depth for our investment models. But no, I totally agree with Nick's point. If I think that was part of your point. Yeah. Okay, good.
Amanda, you wanted to chime in?
I was just, wine is incredibly nuanced. And I think maybe part of this conversation has to, at some point, maybe not now, touch on the fact that, even when you're looking at critics' reviews, you're looking at reviewers, wine has a complicated calculation in that not everyone gets it right. And we have to be thinking about not just particular bottles, but particular critics who are reviewing those bottles. So I think that there's a lot of calculations that have to be made. And maybe when we get further into the conversation, we can talk about some professionals who are great at evaluating all of those different calculations that have to be made.
Thank you for that. Let's move on to segment 3.
Managing a wine collection like an investment portfolio means moving beyond simple storage. Professional bonded facilities offer the controlled environment, insurance, and provenance required to preserve and maximize value. But physical storage is only half the equation. The other half is data. Cellar management software turns your collection into a trackable asset class, monitoring acquisition cost, current market value, critic scores, and peak drinking windows. This allows you to make informed decisions about when to sell or hold. Sell too early and you miss appreciation. Hold too long and risk quality decline. With the right tools and storage, your cellar becomes a strategic financial instrument, not just a hobby. The goal isn't just to own great wine. It's to ensure every bottle delivers either maximum enjoyment or optimal return at precisely the right time.
Callum, can predictive models determine the optimal drinking or selling window?
So we think yes. It's very interesting. You can look at the way that, obviously every bottle is different. First and foremost, it depends on how a particular bottle has been stored. But we do factor drinking windows into all of our modelling, and we know that for certain wines from certain producers, there are peak drinking windows. And when you're looking at the right time to sell a wine, our models typically show the best time to enter the market is about 4 years after it's been released onto the market. And it's roughly, well, it depends on the wine massively, but as you're reaching the peak of the drinking window, when the wine in theory becomes, the highest quality, then is the right time to sell it. What is interesting when you look at the data is you can see that doesn't apply equally, obviously, to all wines, because wines age differently. But it's taken at a regional level. You can see certain regions, one in particular, that bucks the trend. So the only region in our data set where wines continue to improve in value, typically after the end of their drinking window, and obviously, once they reach a certain age and they've got a degree of collectability around them, then clearly they become truly collector's items. But for normal wines, if you look at Champagne in particular, Champagne is the only region where typically wines from that region continue to appreciate in value at a slower rate, even after their drinking window has ended. And the theory that we have around that particular region is that Champagne, out of all wines on the market, probably have the strongest brand equity. Even if you are not remotely into wine, you might not know what a Bordeaux first growth is, but you certainly would know what Dom Perignon was as a producer, because it's infiltrated the public imagination in such a way. So I think my answer to your question more broadly is yes. I think you can tell, but I'm very interested to hear what the rest of the panel has to say about it.
Yeah, Amanda, I'm curious to what extent you think that computer programs can capture those nuances. And maybe what tools or platforms do you use personally to track your bottles?
I think we have to talk about the fact that we're talking maybe about two different things for consumers and buyers of wine. The drinking window for someone who's actually consuming a bottle of wine is going to be different than for someone who's trying to resell that. The predictability of where a wine is going to go in the course of his life is to some degree limited. I think that Callum's right. Like, I think if there's models that support that that say 4 years is the time that you should sell it, I think that's great. But is that the right time to drink it? I don't know. Everyone's going to be different. In terms of what models I use, this is where I think critics and professionals are really, really helpful, especially critics and reviewers who have been around the block a few times, who know regions, who know vintages intimately. And so looking at what their assessment is really critical. But as a consumer, and even as a professional myself, you just don't know where a wine is going to go. I've had 2011s from Napa, for example, were completely written off when they first came out. And now here we are in 2025, and they're beautiful and they're drinking wonderfully. I don't know how they're trading. I don't know what that looks like on a secondary market. In some ways, I'm sure you can still get a great value, because if you go back and you look at the scores of the critics, they're terrible. But the wine itself is drinking beautifully. So that's where I think there's a level of nuance to this conversation that I think, we have to tackle a little bit too.
Nick, how do Sotheby's clients maintain optimal provenance in storage to maximize auction performance?
So almost all of them use professional storage, but there are people who also will have an element of their cellar at home for drinking. So that's something that they will do. And we're often appraising collections, both in professional storage and within people's cellars. And I think that there's an understanding that it is critical that we can demonstrate, and they in turn can demonstrate to us, that the wines have been well stored, that there's been real care and attention taken around temperature, humidity. But also, when we think of provenance and we think of the quality or the return on the wines, if you want to look at it that way, the paper trail is essential. And so the absence of a paper trail can materially affect the value of a wine, not because there's anything particularly at fault, but simply it raises questions around why there is an absence of a paper trail. And so I have to say, when people approach us and say that they've discovered some wines that they'd forgotten about, or that they were given something but they have no record as to where they came from, that will affect the value of the wine at resale, as opposed to wines where there is a full paper trail and we can see every aspect of their life. And in some respects, I describe this to people in a similar way that you would look at the valuations of cars, for example, classic cars. You would expect to see every receipt and every detail as to how the car had been looked after. And if there isn't that available, then that raises questions as to why that's missing. And the same is true of the greatest collections of wine. And so diligent collectors have reams and reams of paperwork that are made available to us, which we keep confidentially for them, but we can refer to pass on that information in a confidential way should the question come up.
How often do you encounter collections damaged by poor storage?
Not so often, poor storage, because they wouldn't actually come to us for us to proceed with. There was a cellar particularly that I can think of in Europe where we went and the wines were in perfect condition, but the cellar was incredibly damp. And so when I say the wines are in perfect condition, I mean the wines inside the bottle were in perfect condition, but the damp had affected the labels and there was quite a lot of mildew on the labels. And so aesthetically, the labels had been damaged. And what we were able to do for that particular collection was go back to the cafes in question, Bordeaux mostly, and arrange for them to consider, and they agreed actually to relabel a number of the wines. It was because the individual in question who owned the wines had been such a long-term client, and actually in this particular instance, a close friend of the father of the owner. So they made an exception there to do so. But generally, I mean, the aesthetics are really important, and particularly for a market like Asia. It's also true of the States as well, that people are not interested in damaged labels. And often labels are stored in racks and the bottle is removed and put back in again, you get nicks on labels, which cause problems. Obviously, too much humidity can cause problems, and a lack of humidity can cause the labels to dry and fall off. So there are issues here that can be materially damaging to the value of the collection. But I'd say if the wines had been stored poorly, then and there was some potential risk to the damage of those wines, we wouldn't take on the wines anyway. So we'd look to understand that, and that would be apparent through levels of ullage levels and seepage and all sorts of other elements that we'd look at immediately.
Robbie, how does Liv-ex integrate seller data or the paper trail that he was talking about?
Yeah, so Liv-ex, one of the core reasons Liv-ex began was to improve transparency, efficiency, and safety in the fine wine market. And we're a B2B business, we're a B2B exchange, so we're dealing with that at the wholesale trader level. But I think it does filter down to obviously the consumer, the collector, the investor, and that transparency that has existed and been built upon, and we've been part of over the last 25 years, has enabled consumers to, I think, broaden their horizons, understand their wine collection more, and give them more of a voice, and I guess control in how they want to buy and sell wine and store it and so on. Consumers, I think, want transparency around fine wine data. We provide valuations and are recognized as the global benchmark for fine wine pricing. So when people receive a valuation, merchants from across the world will provide a Liv-ex valuation, because we can provide it independently. We've got no skin in the game. We don't hold any stock ourselves. We don't care whether the market's going up or down. It's we're there to just report on what's happening. But people, as Callum said, can also take drinking windows. They can take tasting notes from critics. They can do this now at 9 p.m. on a Thursday night. They don't need to call up their wine merchant anymore in order to evaluate and assess their wine collection. So the ability for technology to plug in to multiple different data sources, and then present the consumer with that level of transparency has come on leaps and bounds in the last 25 years, and particularly in the last 5 years. I think the other thing to just touch on that Nick was talking about in terms of storage and so on, that has also come on leaps and bounds in the last 25 years. There are Bordeaux Chateau and Burgundy Chateau for that regard, and across the world, who have only in the last 15 years installed temperature control. Now they've got historic cellars and so on that can replicate that type of thing. So it's possibly not of concern, but the more the business, the wine industry professionalizes, the better experience that the consumer is ultimately going to get, the better access to wine, and wine in good condition and with good provenance is gonna get. But yeah, we take it extremely seriously, and we probably open and verify more cases of wine than any other company in the world, to make sure that they're in the right condition, the correct wine, and so on.
Okay. May I just add something to that point? I also think there's a fairly big difference between the types of wines that we would be interested in, and for example, it sounds like, Nick, from what you just said, a lot of the wines that you're looking at are stored in bond, and a lot of them are really rare wines that you could only probably find in someone's private cellar. And I think that makes a big difference as well. And one question, actually, Robbie, I'd love to ask you would be, we've seen a number of businesses that have sprung up that talk about, using blockchain to track not us, by the way, but, using blockchain to track a bottle of wine from producer to bond. Do you think that that's an over-engineered problem? You know, it's almost an artificial problem that someone's trying to solve, or do you think that kind of technology, you know, does serve a place within the wine trade?
I think the wine industry is extremely fragmented. We've been trying to create an efficient supply chain for the last 25 years, and it's still extremely fragmented. Now, for blockchain to be a viable solution for any, you know, effective database, you need to have buy-in from the whole supply chain, and I think getting that would become very difficult. I'm not going to say it will never happen, but I think the application of getting that buy-in across producer, negociant, merchant, the storage warehouses, and the transporters in between all of that, down to consumer, you know, it's a huge beast to try and overcome. So, you know, and then you go into, well, is that application worthwhile? And you know, I'm not necessarily convinced it is. I think, you know, there are some perfectly good applications of displaying provenance and so on that don't need the blockchain to do that.
Thank you for that insight. Let's move on to segment 4.
In wine investing, provenance isn't a luxury, it's the baseline. A bottle's value depends entirely on proof of authenticity and storage history. Without that, it's just glass and guesswork. Today's counterfeits can mimic everything: labels, corks, even sediment. But modern authentication fights back. NFC chips and blockchain tracking now allow instant verification, linking each bottle to a tamper-proof digital record. For older wines, forensic experts inspect printing methods, glue types, and even glass composition. The red flags are clear: vague origins, fake vintages, and too good to be true backstories. Whether you're buying a $500 Burgundy or a $20,000 Bordeaux, ask, where has this bottle been? Who stored it? And how do I know it's real? Provenance is more than paperwork. It's the one factor that determines whether your investment is protected or permanently compromised.
Ooh, that looked like wine CSI. Amanda, what consumer behaviors unintentionally fuel counterfeit circulation?
Well, certainly keeping your empty bottles. I know that's been a big one, especially at restaurants. You know, I think one of the ways that one of the more infamous counterfeiters used to go about doing his business was going to various high-end restaurants and grabbing bottles from the trash can that had been discarded. So, you know, that's one way for sure. But in terms of like, it's hard, you know, counterfeit, everything is out there, right? And we can only do so much to avoid that. But on the consumer side, you know, I think this really goes back to maybe where we started at the top of the conversation that Nick mentioned, which is like, you know, when you're buying wines as a consumer or as a potential investor, who are you buying from? And this is where trust agents become really key, especially if you're buying at auction. You know, not all auction houses are created equal. Certainly a Sotheby's would be incredibly trustworthy, but this is where doing your research and making sure that the auction house is doing their research, because ultimately as a consumer, you're probably not going to be able to figure out whether a bottle is counterfeit or not just by looking at it. You don't have the resources. So this is, again, where professionals really come in handy, and also making sure that the person that you're buying from, whether that's an auction house or whether that's a concierge, making sure that they're well vetted and well trusted.
Robbie, how does Liv-ex help standardize trust between global trading partners?
Yeah, so we... number one, we're a closed club. So in order to join Liv-ex and become a member of Liv-ex, we need to verify that you're a reliable and trustworthy merchant, wine business. We only deal with businesses. And then in terms of the transaction, we receive, open and verify the cases of wine that are transacted on the exchange. So I think last year we might have opened something like 50,000 cases of wine, take the bottles out, take photos of them, inspect them, by hand, much like I'm sure Sotheby's and other auction houses do. And we've got internal authentication experts. We've got probably the largest database of pictures in the world. In order to authenticate, you need to be able to see what the correct wine should be, and access to very high optical zoom cameras, and producers are putting in some quite sophisticated anti-counterfeiting measures. So awareness of what those are is paramount to the business that we do. And obviously, if we're not happy with something, then we will challenge the seller, and also pull in additional authentication experts if we need to, and obviously cancel transactions if we're not happy with something.
Nick, give us some insight into the layers of verification that Sotheby's implements before listing a bottle.
So, Andy, I've talked in some detail about where even before the wine is inspected, we will have looked in detail as to ascertain how and where the wine was obtained. We'll ask where it's been, and then when on site, and we'll either inspect on site in situ, or we'll ship the wine to our warehouses around the world, and then we'll inspect the wine there. Inspection involves the opening of every case, as Robbie's spoken about. It involves us looking at bottles in detail. We use visual aids such as very high definition lenses, which allow us to look at bottles. We'll take photographs. We employ an external consultant who works with us very closely. We have the benefit of a very substantial database that we've collected, and to give you an indication, we'll be generally inspecting and selling somewhere between 50 and 55,000 lots a year, which could be more than one wine. So it gives you an indication of the volume, and that's been going on for some years. And of course, we are in constant contact with producers who work with us very closely to ensure that any questions that we have are answered. And just to give you a specific example, the most expensive bottle that we've ever sold was a bottle of Macallan whiskey from 1926, the Adami label, and that was sold 2 years ago and fetched just around $2 million US. We worked very closely with Macallan, and in fact, to the extent that together we redesigned the foil that was put on in 1926. It was made from a tin that was not available in Scotland, so we had to go elsewhere to source it. And together with Macallan, we redesigned the tin to match photographs that they had of other 1926 bottles. So that level of collaboration means that we can be really absolutely sure, and it also further authenticates bottles when it's been back at the estate before being made available for sale. So we take every possible measure we can. And the other thing I'd say is that there is no disadvantage for the house to simply reject bottles, because they don't belong to us, and we'll simply say no thank you, because we've lost nothing in doing so.
Incredible to hear about the intensity of that process and that work. Colm, can AI and data analytics help to flag anomalies suggestive of counterfeit activity?
That is well above my pay grade, I'm afraid, Andy. So I'll have to politely decline to answer that question. If our head of technology was on this call, maybe he'd have an answer for you, but no, I'll have to pass.
Okay. Is WineFi like? How are you leveraging data?
I think Nick's got an answer for you.
Nick has an answer.
I'm so sorry. No, I was just going to.
You have to run?
Forgive me. I'm so sorry. I'm just going to add to Amanda's point that I think that critically we must put out a plea to everybody to be incredibly careful with their empty bottles, because that becomes an absolute source of opportunity for fraudsters. And so it's much harder when you're authenticating bottles if the bottle itself is genuine. And then you have to then start looking at all sorts of other considerations. And so as a starting point, please, as a request to people who are collecting bottles out there, don't make available, don't be persuaded to sell break those bottles, or at the very least, don't release them if you're going to keep them. Sorry, that was just a plea for, an anti-fraud measure that was very effective.
And please recycle. Anybody else?
No, but just on Nick's point, it's very interesting if you go on, eBay, for example, and you're searching certain producer names. You have to wonder why empty bottles are priced as expensively as they are, and that is what Amanda and Nick have just alluded to. It's because they are, they're bait for fraudulent behavior.
Yep, there's a secondary market for it. All right, let's bring it home and go to our last segment.
Selling your wine is not just about finding a buyer, it's about executing a profitable exit. The first step is choosing the right channel. Auction houses are ideal for prestigious, high-value collections and can command premium prices, but they come with long lead times and high fees. Brokers offer speed and discretion, often closing full collection sales quickly. Online marketplaces give you pricing control and lower fees, ideal for smaller holdings. Regardless of the route, preparation is everything. Create a complete inventory, gather provenance documentation, and get professional valuations to compare your options. Ensure your wine is consolidated, inspected, and ready for sale. Finally, negotiate your consignment terms, seller's commission, marketing fees, and payment timelines can all be flexible. Done right, liquidation is not just the end of a collection, it's the realization of your investment strategy.
So I will go to Nick, since I think he has about 2 minutes before he has to jump. In high-profile auctions, what surprises you most about the way bottles sell?
I think the thing that I love seeing is the fact that there are, on occasion, and we see it in bidding battles. It happened with an auction that we conducted about 6 weeks ago. Two committed collectors who really, really wanted the lot, and neither was prepared to give any ground. So on it went, and this was actually a charity auction. It was a bottle of whiskey rather than a bottle of wine, but it was for a very good cause. But it had a low estimate between £60,000 and £100,000, and sold for £650,000 after a bidding battle that continued for 12 minutes. And neither of them were prepared to give up. So on each occasion where you would have expected one of them to say, "That's it, I'm out," they kept going, and it was such a joy to watch. And so things like that do surprise me. But I'd also say there are occasions where things are overlooked in the volume of wines that come to auction, and spirits that come to auction. There are occasionally things you see slip through and think, "Gosh, that looks like such a bargain." And it's just that the volume of things that are available to sell, sometimes things do slip through. And so, as many pairs of eyes as there are looking at auction, there are occasionally surprises, both at the high end and things that get missed as well.
Well, thank you, Nick. Thanks for joining us. Thanks for spending the extra time with us. You've made it to the last segment, so much appreciated.
Thank you very much.
Callum, how does fractional ownership change exit dynamics for selling?
Well, quite a lot. So the structure that we utilize at WineFi in order to fractionalize portfolios of wine specifically rather than single bottles is something that, as I mentioned, is known as a syndicate structure. It uses something called a bare trust nominee. But critically, there are certain rights that investors have, effectively as a group of investors that co-own a portfolio. And a unique feature about this is that they all have what in official parlance is called a day-to-day control of the assets, which in short means that any decision around the wine that they're holding, including a bottle by bottle exit, if the syndicate decides they wish to exit a certain case of wine, a vote needs to be conducted. So the syndicate needs to agree before selling a wine. So I think that's a relatively unique dynamic versus a single collector or a single owner where it's ultimately in their gift to decide whether or not they sell. This is a group of people making a decision together. And I think that in and of itself is, an unusual dynamic. It's not the same as a fund where you have a group of people, you have a single fund manager making a decision on behalf of a group of people. In this instance, it is a group of people making a decision together, which I think is unusual.
Yeah, that's unique and interesting.
Yeah.
Robbie, are there market signals that suggest when might be a good time to sell?
Yeah, all the time. I mean, we're dealing obviously on a B2B level, so I suspect the actors, the buyers and the sellers, probably have a little less romantic attachment to the wines they're buying and selling, and they're looking at it more on a business level. But of course, things like quality of the vintage, critical acclaim, waning demand, these things all affect how the market operates and ultimately the price that a wine could fetch. I think the other, and not to labor the point, but we've talked about it a lot, but the transparency and the access that people are getting now is enabling people in a far greater and far more efficient way to buy and sell their wines. We talked about collectors getting access to data in terms of valuations. We talked about giving them the control to make those decisions in their own time without having to speak to an individual, but also providing them with some liquidity. So there are now businesses across the world who are providing their private clients with a pool of liquidity, saying, here is a bid for this wine. If you want to sell it, then we either us as a business or another private client or another business is a willing buyer. So that kind of matchmaking is obviously enhancing the experience for the fine wine collector, the fine wine investor, the fine wine drinker, just in terms of giving them access.
Amanda, what are your thoughts or advice on that emotional component and really trying to find that balance between monetizing one's collection versus enjoying it?
Well, I mean, Andy, I throw that back to you. Like, what's your advice for an emotional investor in general, right? Anyone that's investing emotionally is probably going to make mistakes, and they probably should seek, in the nicest way possible, professional help. Because if you are approaching something emotionally, you're probably not thinking rationally. And if you are truly investing in wine with the intention of reselling it, maybe not necessarily to drink it, they're two different things. And emotion really can't play too big a role because you get emotionally attached to the bottle itself. And two, then it becomes like, I just love the guy so much. He was a really good dude. I met him at the winery. We went to the same college. You can't put that out on a catalog in the auction house, right? Like that doesn't translate.
I have a hugely vested interest here, but I aggressively agree with Amanda on that front.
Don't be emotional.
Be data driven.
Yeah. Well, yeah. I mean, Andy, what do you think? I mean, I'm sure you deal with this all the time with, emotional investors and what you do.
Yeah, it's a good point. I think that emotion, we do our best to separate the investment decision from the emotion, but then in many respects, it's easier said than done. I think in practice, there's always an emotional component. It's just, are you able to keep it, under control when you're making a decision? I think the emotion's always there. It's just a matter of, can you back it up with a rationale and with evidence? And then it comes down to, trusting the work of your brain, of your heart, and of the gut. It's really a combination whenever you're making investment decisions or any decision otherwise.
I think.
Well, and I think.
where
Go ahead.
where wine differs maybe from, you know, investing in something else, and Callum may think differently, but I think most people who invest in wine aren't pure investors in wine. They also drink wine. They also probably collect wine to some degree. Those kind of three categories merge probably quite significantly. And so, you know, of course, there will be some going into it in a pure investment mindset, and that's where, you know, the quantitative analysis that the likes of WineFi do is going to aid them. But if they're a collector going into it with, you know, one day I may drink this bottle or one day I may sell it. It depends on the value at the end of the day and how well informed I am in making that decision. Then they've always got the benefit of drinking it.
Yeah, I almost completely agree. There are some elements of our client base, interestingly, who solely treat it as an investment, but I would say they are the exception rather than the norm. I would say the most common WineFi client would have a seller elsewhere, you know, a more kind of drinking, collecting seller, and you know, to separate out drinking, collecting versus investing. Two are for pleasure, one is for anticipated financial gain. You know, that's where I would have the line there. And it always interests us when someone asks if they could list their other wines that they might, you know, have held, you know, with Lane Wheeler or Berry Brothers, whoever it might be, on the platform. And sometimes, you know, their private holdings, well, usually their private holdings will drastically outweigh their investment holdings. But the reason that they've come to us is because they've seen certain wines rise and fall in value over the years. And they've gone, oh, you know, WineFi doing something interesting here. You know, if there is an opportunity to kind of outperform the wider market, you know, this is a hobby that I understand, and I kind of want to start viewing it through a more investment lens. It's almost it's easier to justify that spend to yourself as an investment rather than say, oh, I've spent X amount on wine. And it's a really interesting one because it actually somewhat disproved the thesis that we set out with, which was there was a large and untapped pool of people that were interested in gaining exposure to wine who weren't necessarily wine drinkers themselves. And so, yeah, Robbie, I do fully agree with what you just said. You know, at its core, you know, you can call it an asset or a passion. It is a passion asset. Like there is a term specifically to describe, you know, wine's behavior.
Well, I love it. I think we'll leave it there. You know, many lessons there. Invest in what you know. If you have a passion for wine, it makes it easier to do research. And I love the optionality that you can have an investment that you can also drink and enjoy. So this has been an incredible conversation. One of my favorite takeaways from today's panel is just how much care, data, and strategy goes into building a wine collection. It's both enjoyable and investment worthy. It's not just about buying a beautiful bottle. It's about understanding provenance, market dynamics, and timing to make your cellar work for you. Here's a simple assignment for you this week. Take a look at one item in your collection. That could be wine, art, or even another collectible. And just think about it like an investor. What makes it valuable? How would you verify its authenticity, track its performance, and decide the right time to sell? I think just doing this exercise will give you a new lens for appreciating your investments and maybe even inspire your next move. Let's connect on LinkedIn. Find me by searching Advisor Andy. Inspired Money is brought to you by me, my amazing co-producer, Bradley John Eaglefeather. He is the one who did some of those animations and edited the segments. He's the magic behind the scenes during the live stream and make sure every segment is polished and ready for you. Shout out to Chad Lawrence as well for all the graphics, animations, and editing that make the show look great. And of course, we wouldn't be able to do this without the insight, generosity, and expertise of our amazing guests today. Thank you all for joining and being so generous with your time. Be sure to check out their work, follow them, and keep learning from the best in the business. Nick Pegna, who dropped off a little early, but stayed much longer than originally expected. You can find more about him at Sotheby's.com to explore Sotheby's record-setting auctions and fine wine insights from around the world. Check out Callum Woodstock at wineify.co. To learn more about WineFi, their expert curated investment portfolios, and their insights on fine wine as tax-efficient, inflation-resistant asset classes, follow Amanda McCrossin at samvivant.me or amandamccrossin.com to enjoy her wine education content, Instagram, TikTok, and YouTube channels. Check out her Wine Access Unfiltered podcast and learn more about Robbie Stevens at Liv-ex.com. That's liv-ex.com, where he shares market intelligence, broking insights, and the latest on global fine wine trading. As with what happens on any live show, we never know what to expect. Dustin Wilson was not able to make it, but he was a guest on a previous show. You can find out more about Verve Wine at vervewine.com. And just so excited. Oh, Dustin is here.
I just showed up.
Dustin, you're here for the
Just
wrap.
arrived. Sorry I'm late.
I'm sorry that we've run out of segments
I missed
for you.
it.
Hi,
But-
Dustin.
We're glad that you
Everybody.
can see your face. What's new
Hi,
in your
Justin.
business? Though?
I'm sorry I missed everything. What's new? Gosh, I missed the whole thing. My apologies. I'm just running around like a crazy person, like I'm sure many on this this call are.
Yeah, you have to connect with Callum because you're both entrepreneurs and I'm sure can share war stories and successes and commiserate
Indeed.
with one another.
Absolutely.
Yeah, so check out Dustin at Verve Wine. He's got an amazing modern retail and hospitality experiences, plus his work with Après-Vous, supporting visionary restaurant concepts. Thank you all for joining us today and inspiring us to have these gatherings to talk about enjoying life through wine and other things. We have great shows coming up. We have the Mindful Retirement, Creating Financial Peace and Personal Fulfillment next week. That's on Wednesday, November 12th at 1 p.m. Eastern. Hope to see you then. Until next time, do something that scares you because that's where the magic happens. Thanks, everyone.